Jessica Couch here today, filling in for Ian Boshoff, who is busy working today. We are back to working time, and the sun is out. It's a good day. Good to see you, Joseph. I have Joseph Madrid filling in today for my usual spot here. How's it going, Mr. Lender?
Good. Good to be here.
Good. Well, we'll get into that in a second. I was going to give you our purpose first. As you know, here on Real Estate Profits with Purpose, we like to give 10% back of any business derived from our show to Sweet Dreams Foundation. It's something I've been part of for over 10 years. I'm on the board, and we'd love to have any help with that. We are a nonprofit 501(c) faith-based organization. We believe it's our ministry to help children in the community, and we do dream bedrooms for children that are suffering from life-threatening illness, and we also have a NICU program. So if you're somebody who would love to be involved with something like that, like really heartwarming to be part of something like this, we'll take your $5, your 5 minutes. I've had lots of friends that have kids in high school or junior high that need to do their community hours, and they've asked to come in and bring lunch, bring cookies, do pictures. I mean, at the beginning of this, I'm not good with IKEA furniture. I can swing a hammer. I'm always on construction for mission trips, which people are surprised with my nails, but that's what I do. But I am not great at IKEA furniture, and we do a lot of IKEA furniture. So at the beginning, I came in and just brought lunch, and then I would run around and do interviews and take photos and, meet with everybody and meet with our volunteers and then post everything. So there's a spot for everybody. Do not feel like if you can't swing a hammer, you can't put together IKEA furniture like Jessica here. There is still a spot for you. You can bring cookies. You can bring your kids. You can be part of our mission. We'd love to have you. So you can text me direct if it's something you want to be involved with, 916-532-8916. Joseph, why don't you tell us a little bit about you, who you are, what you do around here with Pro?
Well, Joseph Madrid, and mortgage guy, loan officer. I've been in the business about 20 years now. That's
Gosh,
crazy.
You must be old.
I started when I was 13.
I'm just joking. You have a lot of experience, and I think that's what makes you special to our team.
I do. Thank you. Born and raised in California. And, we've kind of been through a market similar to this, right?
Mm-hmm. Yeah, no, it's a cycle, right? We get all surprised. It's a cycle.
Right. And I think what happens briefly is there's always an influx of new talent that comes in, right?
Sure, yeah.
So when that happens, this is new to them.
Yeah, no, you're so right. I'm seeing a lot of the guys that are newer, they're going into wholesaling and fix and flip, which I want to get into with our predictions because I think it's an interesting place. But you've been through this before, right? I mean, same. I got licensed in 1999.
Yeah,
right.
That's
1999. Awesome. It was like a million years ago in the 90s. It's crazy to me. But that's when I bought my first house. Yeah. Bought a HUD house, $500 out of pocket. It ended up being $35, but hey, it worked. Yeah. Got into a house, and I was able to build $120,000 in equity. And in 1999, I was making a year like $30,000, right? So $120,000. Yeah. I'm like, I need to do this for a living. And I quickly got licensed right after we closed our house and wanted to go out and do exactly what my broker was doing, and have had fun with it ever since. But it's a big cycle. And we act surprised that we go through this again and again.
Right.
So what would you compare this to? Like, what are you seeing right now that makes you think of this? What's the last time you saw something similar to this?
So the big crash, right?
Okay.
Well, so to that point, though, let me ask you this, because I wanted to ask you, what was your interest rate when you got your loan in 99?
It was 7.9. And, I knew nothing. I was like a baby child. I was, 23. And they said, hey, the rates just went down. They're below 8. And I was like, is that good? I mean, I have no basis, right? Like, is that good? And they were like, it's great. Right. We signed today. And I was like, hot dog. Okay. What do we do? And then, they brought over a notary and we signed everything at the house. I had a contractor working there. There was a ton of dry rot. I mean, I didn't know what I didn't know. Right. So the rate was 7.9.
And that's my point. Right. So at that time when I came in in 03. So a little bit after you, and rates we were giving people first, second combos,
right, with
8 1/4 on the front,
right,
and 12 1/2 as a second, and everybody was excited.
No, so time, what rate were you dealing with in 2003?
In 2003, just in the 8s.
Okay,
and the difference is the cost of homes.
It's true, because I bought another home. I sold that home, took my equity, put it into another property in 2003. mid 2003. I had a second baby, didn't have enough room. I needed a pool. That's what I really needed. I needed a pool for my children. And so I found another property, and the interest rate was so high. We did an interest only, a negative AM interest only.
Yeah.
And the lender literally told me, this is a great deal. And I said, I don't know what you're talking about right now. This is a terrible deal. This is a short-term loan. Understand what product you're selling right now. Okay.
Right.
We're going to do a little more role play with how you sell this product in the future.
Right.
Okay. So, and I knew then it was a very short-term product, but given the market we were in, I knew it was the best product that I could use to have an affordable payment.
Sure.
And I think that's the difference. Like, we're going to go back to seeing, I think we're going to go back to seeing all the things we saw before. They just have a different name. We're like, oh, those are gone. I'm like, no, they're not. It's a big cycle.
Right.
They come back around. They have a new name.
Right. Yeah, it's kind of like clothes come back, right?
Yeah, I was just about to say it.
But my point in bringing that up is to help everybody have a little more peace of mind.
Right. Yeah.
That this is a normal thing. Okay. Now, back to the prices, the only reason they're different because prices increase all the time.
But so is minimum wage.
Right.
I talk about this all the time with, my children who were complaining that they're making $20 an hour. When I started working at, 14, minimum wage was $4 an hour.
Yeah.
$4. So I don't know. I can't do girl math quickly in my head, but the fact that we're at 20 now for minimum wage and we were at 4, like it's, I don't know, what's the
5 times as much as it was at that time.
Thank you. Okay, so we're 5 times as much. Our house prices 5 times as much.
Right.
Well, I don't know. I mean, maybe 4 times as much, but it's relative. That's my
Exactly.
point. It's relative.
Exactly. And that's what I was getting to. Exactly what you said. You hit the nail on the head. Because everything is here that was then. It's just a different time. Like the wages match everything.
Yep.
The cost of homes match everything. Everything
True.
matches what the economy is, right? It's just we got spoiled with these rates.
So spoiled.
So spoiled, right? And
So
2%,
spoiled.
what everybody saw is low in the 2s, has never happened in the history of interest rates on this planet.
Thank you for bringing that up. Okay, so never happened on the history of this planet. That's a bold statement, and thank you for making it. Because I want to have some perspective on where we are now versus this like pretend reality that we had just a short time ago.
Sure.
Because, and maybe you can speak to this. I don't want to, overstep what I actually know. But, when rates come down that low, it's, the Feds lower the rates because of what's going on behind the scenes in our like bigger picture market, right? Things are going crazy financially in our country. And so they lower rates to get an influx of buyers out there and bring in money. And I don't know the exact stat, but I've heard it said that like each home purchased brings like 100,000 in like influx into Home Depot and, the gravel company, all the things that you're going to need when you purchase a home. It goes back into the, into lending. There's this influx of money that comes in. So when our economy starts going crazy and we need an influx of money, rates come down. But we're not going to see a rate like that because that was more of a recovery from what we were coming out of in this, 2000 whatever last crash, right?
Right.
I don't know if we're going to call it a crash, but whatever we were coming out of then, right? Recession.
Right.
Okay.
Right. And so that's kind of my point is that, those rates were an anomaly. And normal market rates, the lows are in the 4s. Like when we'd see 4s, and we saw it probably 3 or 4 times over the last 20 years where it hit in the 4s. That was the natural progression of the cycle. The 2s and 3s was not normal.
Right.
So everybody could say goodbye to those unless something drastically happens. So we got to get used to what they call the new norm, right?
And what would you say, and I want to get into that with predictions, what would you say currently our new norm is?
I think we're headed back into the normal cycle
Okay.
like we've been talking about, right? So if people pay attention to rates, they have been gradually headed in the right direction. We were only at 8, or I shouldn't say only, we were all the way up to 8 only 60, 90 days ago, right? And now we're in the 5s.
Right. So that was going to be my question for you. Like, where are we right now with FHA? We're in the 5s, right? We're below a 6.
Right.
And where do you think we're going to be by year end?
By the year end, I think we're going to be in the 4s.
I think so too.
Yeah.
And I wanted to get into this. This is why I love doing the radio show. One of the many reasons. You can track this.
Yeah.
You can go back. What is today? The
1st.
Okay, we're at February 1st, right? Well, we're recording February 1st. It's going to come out on Saturday.
On
So
Saturday.
we're, February 3rd or something.
Correct. Yeah.
But I want to go on mark with this. We are right now in the 5s, and I think by year's end, we are going to be in the 4s.
Right.
which makes this a prime time. And I want to get into that when we come back from our commercial break and talk about where we are right now, where this sweet spot is, so you don't miss it. So Pay attention. Predictions coming up when we come back.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 0174567.
Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 0174567. And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Hey friends, welcome back. That's some uppity music for our intro back. Thank you very much. I appreciate it. We are talking here about predictions. If you just joined us, we were chatting about where we were previously in this big cycle that we act surprised by when it comes back around. We were also just talking about how you could track us and how I think we're going to be right at the end of the year. I can't count how many times this has happened, and it's sad because I've helped people move and they've sold their house and they've said, and this happens over and over every year, oh, we're going to wait. You know, the market's going to crash. We watch the news. We're very informed. You know, my uncle knows everything, whatever. It's usually something like the uncle. We're going to wait because the market's going to crash, and then we're going to buy a house because it's, you know, houses are going to be 50% off. I heard about it. And I'm like, cool. I don't think that's happening. I want to encourage you to, you know, like keep in touch with me, and we'll, you know, keep in contact and see if I can't help you because things are rapidly changing. And they'll wait, and then they get priced out.
Right.
And that's it. Rates go up. They're priced out. Now they're still in an apartment or a condo. And it's just, it kills me every time this happens.
Yeah.
And they're like, oh, wish we would have known. I'm like, oh my gosh, we had this conversation like 8 times. Like, I was so clear. I know this is what's going on. Yeah. So I want to encourage people where we are right now. We just talked about it before the break, but if you're just joining us, we are right now in the 5s. Is that right,
That's
Joseph?
right.
5. In the 5s. If we were to do a buy down, we're at high 5s. If we're to do a buy down, temporary buy down, my favorite thing to do, it's what we did on every single buyer last year. Every single one for 2023, 2% temporary buy down. Buys you down 2%. So we're at 4 now, minimum, maybe 3.9. We're at something like that for the first year. Your second year, it's going to go up 1%. But we know that rates are going to be low enough within that 24 months that you can now refinance. Yeah. And your benefit is not just the lower rate for that 30 years. The big benefit, don't lose sight of this, guys, because this is the big thing. You now have equity. As the rates come down, prices go up because we won't have the inventory, and now you have more equity in your property. Yeah. So your refinance is really worth it. That first 2 years, it's all interest anyway. So don't trip on that because people don't worry about that. Worry about the fact that you have enough equity now that you won't have PMI. You won't have that premium mortgage interest if you go in on FHA, and you may as well, unless you have outstanding credit, which is a smaller audience. Yeah. Go in FHA, get the best rate you can with the temporary buy down, and then refinance in 12 to 15 months when the rates are at the best sweet spot they can be, and you have the equity there. And then you can get a 30-year fixed at a lower rate and get your PMI off. And you have a lower payment.
Yeah.
You have a lower payment than you did with the buy down because now you don't have PMI.
Yeah, and the thing, you're exactly right. And
Thank you.
The thing, and the thing that I think can help listeners and the public is to listen to the experts, right?
Right.
And I say that because it's what's going to happen, like you're talking about. It's almost like not heeding a warning for an avalanche or a tsunami, right? And then by the time you see it, it's too late.
Kind of like Noah's Ark, right?
Yeah, exactly. But, you know, to your point, is everything starts to change. You know, I got a text this morning. Exactly to your point. One of my clients decided, I'm going to wait 18 months and see what the market does, right? So I said, you need to call me first before you make that final decision.
Sure.
Because we know what's going to happen.
Right? We do.
Rates, rates are going to go down, right? But it's going to be a feeding frenzy.
Yep.
All of these, it's going to be like blood in the water. It's going to be just like it was 2 years ago. And I think that's what we really need. And I know you've been saying it, right?
I do a video like 3 times a week. I have gone on video saying it, and I'm not afraid to.
Yeah.
In 16 weeks from now, 4 months, and I've put these out several times this week, we are going to be in a different market.
Yep.
So what I can get you right now in way of credits, and I will get you 2% back for your temporary buy down, and I'll get you 2 or 3%, depending on if we're doing conventional or FHA, for closing costs.
Right.
You shouldn't come out of pocket with any of those. We have enough inventory and enough homes that have been on over 60 days that I can get you that credit.
Exactly.
In 16 weeks, it's not going to exist.
Right.
So in 16 weeks, and you're like, hey, rates came down. My uncle called me. He blessed the situation. So now I'm ready to rock and roll. We're not getting that.
Yeah,
We're not.
exactly.
And that same house that you were going to pay, which I want to talk about, and I'm sorry I didn't give you more notice to like run numbers on this.
Okay.
But if you were talking about the same house at 400,000, right, as the example, because that's kind of let's say 5. There's more houses at 5. Let's say 500,000.
Okay.
And we can get that temporary buy down. Your payment's going to be X, right? Like, let's say you're putting down, I don't know, I can't come up with quick numbers on this one, but let's say it's 400,000 for easier math, because I know what that loan amount's going to be with the buy down. We're going to be at 2,600 with a buy down at 4%. Okay. We're going to be at 2,600. Now, if we wait to do this and house prices go up, and now we're not getting the credits, which is precisely what's going to happen. Now we're paying $450, and you are paying for your own buy down to get that same rate, cash out of pocket, and you're paying for your own closing costs. Yeah. So I can get you something fairly close to it. Your mortgage is still going to be higher. The bigger differential is you're out of pocket $20,000. Yeah. 2% for your buy down, 3%, 25. You know, you're 20 to 25 out of pocket that I could have got you a credit for right now. That's the cost to wait 4 months, guys. And that's what I've been like screaming about, because I don't want anyone to misunderstand the sweet spot that we have right now that you're going to miss out on in 4 months. Right.
And yeah, exactly. And it's not that we're trying to get paychecks, right?
This is not a scare tactic. I'm gonna be just fine in 4 months when the market floods and everyone wants to jump in my Tesla and go drive around and look at houses. Don't worry about me. I'm gonna be fine. And I'm worried about you and your pocketbook, making sure that I can get you the best deal.
Yeah, and it's because we've seen this already, right? I mean, literally 2020, it just happened. So it's not that we're trying to predict something, it's that we're saying,
I'm trying, Joseph.
Right, I know. But it's already happened. So we're just kind of telling everybody what the inevitable is. Yeah. And so the key is, like we've been saying, and like I know you've been saying, and Ian as well, is now is the time. Now is the time, because you don't want to be in a situation where you're battling everybody. You want to be in a situation where now you own your home.
Right. Yeah.
Now you can play the market.
Now you've got some equity. We talk about this a lot. You make your money when you purchase, not when you sell. And there's rarely a time that you have to sell, because that's where you lose money. So if you can't, if it's not the right market, and in some neighborhoods it's not going to be the right market to sell right now, well, I'm telling you, where it's not. 4 months from now, we're going to be in a different market. Right now, it's not. So if you have clients like I do right now that are getting ready to move out of state, they have to sell their house, we've got some other options for them. We can do a short-term rental, wait for the market to turn. We can do a lease-to-own option. We can do some subject to. We're super creative like that around here. We've got some other options to get them out of it if they want to get out of it right now versus 4 to 6 months. 4 to 6 months, we're going to be in a different market, and I'm going to be able to get a higher amount for that property. But right now, I really like working with buyers, because it's a good time to go clean up on a good deal.
Yeah. And to your point you made earlier, sellers are willing to play ball right now.
Oh, they have to be. So when I write offers, I talk about this a lot. It's a little obnoxious, but here it is. I send over an offer, 24-hour expiration. Here's my offer. Hey, your house is on the market for $630. This is an actual example that happened recently. $630. We offer them $600, and I need 5% back. They call me like, are you crazy? I'm like, bona fide. You've got 24 hours. I have 4 other properties on the market in your neighborhood, in your gated community, this half-mile radius. 4. You're number 1. 24 hours. Clock's ticking.
Yeah.
Go talk to your seller.
Yeah.
And they came back and said, we'll do it, but we're only going to, you have to pay $614. Done. It's a difference of $17 a month.
Right.
Done.
Right.
We got the property. It was like that on every single one of them. I made them a lowball, insulting offer, asked them for 5% back, and then when they came back and said, "No way, are you out of your mind?" We had the same conversation. Yes, indeed, I am. This is the market we're in right now. Here's the other properties, and I send them over. Maybe you didn't know about this. Maybe you're not informed. Maybe you didn't have time to look at them. We have a lot of inventory within our market right now. And that is what makes it a buyer's market. Right. So right now is a sweet time, but when it swings back to a seller's market, you're not going to be able to get those credits.
Yeah. And it's going to,
simple.
You're right. And it's going to knock a lot of people out of the game.
It is. Right? It is.
Because to your point, they need that help in order to get in.
Yeah, most of the buyers I work with a lot of them are first-time buyers, or they are coming out of some situation. I work with a lot of families over and over and over again, which means they have life situations happen. You know, they need to move for some reason. Unfortunately, I see in our industry a lot of divorce, which just breaks my heart, but it happens pretty often. Yeah. And then they sell their house, and the only thing they can afford is a smaller home for each one of them on the other side. Right. Do a lot of that as well. So for buyers, we're still in this really sweet spot. Yeah. For sellers, we're not. Right. That's going to come in 4 to 6 months.
Right.
But you have to know what market you're in.
Yeah, and that's the key, to be with someone like you, because you're a driver and you drive the situation for your clients. And that's the key. It's not just going out and making offers and looking at houses. You got to have a plan in place. Right, yeah. You got to understand what they're trying to accomplish. And then you got to have someone like you to put what they're trying to accomplish on steroids in a bullet train to get there, right? But it's because you know what you're doing, too. There's a method to the madness.
There is, yeah.
But you've been successful with it. And I think that's the key. And I don't want the listeners to think that we're beating them up, right? Like, that's not the key.
No, we're here to help.
We're here to help.
We are here to. So I was just with clients of mine that I helped them get into a house 13 years ago. 13 years ago. They bought in 2011 or 12 or so. A phenomenal deal. Phenomenal deal. They have a 6-bedroom house, 3 full baths, huge house. We got it for $196. I think they ended up paying $212 because I got all their closing costs covered. It was long before we needed buy downs, but long time ago. Their kids just bought a house out of state, and they are having nothing but trouble. They said, of course we would have used you, but they're in, I don't know, somewhere very far away. The realtor that they used, they went through a home inspection, right? I don't even know that they got a copy, whole bunch of problems, and ended up using their entire savings for closing costs. And I said, why on earth did they not put that into the price? Oh, the realtor said they couldn't do that. I said, why didn't they bump the price up before their appraisal? You have to do that before you get an appraisal, guys. Why didn't they do? He was doing VA. These kids don't have any money. So why on earth would you not have bumped the purchase price up $12,000 and had those credited? So they would have had the money, and they wouldn't be in this predicament where they're borrowing from my clients, the parents right now, to get their roof fixed that nobody knew about because they didn't do a roof inspection. So there's so much that goes into purchasing a home. And when you're working with someone that just doesn't know or just doesn't care, that's what you're going to get. Yeah. You're going to get a problem in the end, and I want to make sure that our borrowers are successful. I want them coming back property after property. I want them to send their grandma, their neighbor, their friends at work, and that's what we're after. It's sure, the paycheck is how we make our living. Absolutely. This is what we do for a living. However, our living is based on people having an amazing experience and being able to want to come back to us. So if I'm just selling houses with no regard to a roof problem or what your pocketbook looks like, you're not going to come back to me. And that's my ultimate goal. We're building a relationship.
It is.
And I know you feel the same way.
100%. I don't want to have to go and reinvent the wheel every month.
Yeah.
I want to watch kids grow up. I want to see people retire, downsize and upsize.
Right, yeah.
And that happens when experts are able to consult correctly, right? And help them understand things correctly. And I think that's the key. That's what I love about what we do here at Pro, right? Is that we're not just transactional. We are, and all of us are, we're about relationships.
It is really
right?
true. We have a team that really cares about relationships. And I want to say a big portion of that goes back to faith and having that as our back.
Right.
Yes.
Right.
Well, when we come back,
agree.
we're going to talk about predictions. We're going to mention some homes that have been on the market over 60 days you could get in on. Join us when we come back. Hi, I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and BA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit ProMortgageRealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Hey guys, thanks for joining us today. We have a show full of information. You're going to want to listen up. If you missed anything, you can call direct. I don't think we've mentioned our phone number one time. What's wrong with me, Joseph? What's your phone number?
916-849-8925.
And if somebody wants to find out what their credit looks like or what they need to do to get into the market this year, they could call you, they could text you, and you could walk them through, right? Mm-hmm. What's that process look like? And then leave your number one more time.
Sure. It's 916-849-8925. And that's the best thing. I always suggest we should look at your credit no matter what.
Right.
Like if you want to buy a house in the next 5-10 years, I don't care how long it is, we need to look at it now so we could prepare. You know, that's kind of the one of the things that I've noticed, just like people with doctors, right?
Uh-huh.
People don't want to go to the doctor until something's wrong.
Right.
Right. But you and I are preventative, right? What do? We go to the gym every day.
We're at the gym,
We
bro.
work out, right?
At the gym.
Take care of our bodies, eat right, so
Right.
that we're not in that situation.
Yeah.
Same thing with this. You know, we need to look at your credit. We need to look at it as soon as possible so we can put a game plan together. Even
Yeah.
if you want to buy in 2 years, 3 years, then let's figure out what that path looks like.
I'm glad you brought this into working out because I say this often, but if you decide you're going to lose 25 or 50 pounds, right? And I know so many girls this time of year, they're like, I'm on it. I'm losing 50 pounds this year. How are you going to do that?
Right.
You need a plan. And you don't usually just, well, some of them just Google it, but you would go and get a personal trainer. You would say,
Right.
what should I be eating?
Yeah.
What should my macros look like? How many calories should I eat? How much protein? I've got a girlfriend that's doing this right now, and that is her number. She's trying to lose 60 pounds. She went and saw a personal trainer at the gym. They gave her some package deal, and he said, here's exactly what you need to eat. I mean, I kind of picked his program apart, but there's exactly what you need to eat. Here's the amount of protein. Here's the amount of calories. Here's exactly what you need to do 3 times a week. Here's the amount of weight training you're doing. Here's the amount of cardio you're doing. It's a plan. Yeah. She doesn't know how to do that without having that plan. Right. Most of us don't. Right. So why on earth would you think you could figure this out on your own without consulting a lender, making sure your credit is worthy? Right. And the credit that you're getting from Credit Karma is not the same as a mortgage pull, right? Can you speak to that?
Oh, I'm so glad you brought that up, because that's something I hear all the time. Well, my Credit Karma score is... So the problem is that Credit Karma only pulls 2 bureaus. Okay. Right?
And there's 3, right?
And there's 3. And as lenders and any mortgage, any company, doesn't matter. You go to Wells Fargo in the corner, or if you call Tom Sells Loans, either one. We all use 3 bureaus. All of us. And the reason why we use 3 bureaus, because it gives us an average. We use the middle score. That gives us an average. It's kind of an average of how you take care of your finances. Okay. Right? So it's important that we look at all 3. Now, here's the thing. I was listening to what you were saying about working out. The reason why we do that, we get a trainer, we follow macros, all that. You want an expert. So you can get expert results.
Yeah, exactly.
Right?
Yeah.
And it's the same thing with a home. You want to work with an expert financially and in the housing market so that you can get expert results.
Right.
That's the reason why we do this. Now, I understand sometimes it's difficult to determine who the experts are, right? But when we get into the process, especially the way that we start, and Ian, I'm sure Ian talks about this all the time, we start first with your finances. I know everybody likes to get the warm and fuzzies at looking at the home, right? Just like when you go buy a car. But then you got to sit down with the finance guy. You got to make sure you can afford it. So instead of putting the cart before the horse, we should look at your financial health first. Yeah. And then we'll determine or prescribe how we need to get you better. Once you're in that spot, and the key to that too is, like you were saying, now's the time, because we have time to do that. In 4 months, we're not going to have time to do that.
Right. Well, and I think the other thing is, when you're talking about the experts, there are a lot of experts out there. Something you guys offer is a free second look. So often it doesn't happen so often because I don't work with other lenders. I really don't. And when that comes up on the occasion, it doesn't usually go very well, because I'm like, hey, we need to go over all the numbers. And they're like, that's not your business. And I'm like, I'm going to call you back when our client isn't on the line. We're going to have a different conversation here. It is absolutely my business. 100%. Okay. Let me tell you that right now. It is my business. This is a different language. And you think my first time buyers are familiar with all these terms within our loan documents? Absolutely not. You best believe I'm going to be on that call with you. So if you're a lender and you're doing some shisty shadiness, you're not going to want to work with me, because I will not have it. I will not have it. And when I work with our team at Pro, that's part of our plan. We go through the options, and there's not just one option. Here's one option. Here's another option. Here's, I don't even want to confuse people with all the terms, but a lot of these will do, borrow paid financing or borrow paid origination. If we can get them a lower rate rather than the bank rate, there's a way to save some money, but that takes a breakdown and looking at that. Are we doing a seller paid buy down and we're going with the bank rate, and then we're using a seller paid buy down? What's that look like? What's your cash out of pocket? Are we holding this for 30 years or is this a 18-month hold? All of these options to look at, and we need to go through like 18 line items to do that. Right. And if your lender is not breaking it down with your agent or your mom and dad on the phone, if we're not having a party call about this, something is wrong. Yeah. People that don't want to go through those numbers, it's because some shisty shadiness is happening, and it's so easy to do in this business. Sure. So you want to make sure you're working with an expert, and how do you know they're an expert and they're honest? They're going to get on the phone with your realtor or your family, and you're going to go through every single option, every single line item. And if they're annoyed about that, run. Run. Yeah. It is not the right lender.
Right. Yeah, you need to know, just the analogy of going to a doctor. Yeah. A doctor is going to tell you everything that's wrong with you, whether you like it or not.
Right, yeah.
But then they're going to present ways to fix it, right? And then it's up to you to do that. It's the same thing. We're going to tell you exactly where you are. Yeah. Don't have an emotional attachment to it. We got to figure it out first, right? And then once we figure it out, good or bad, we're going to get you there. Yeah. Even if it's bad, it's okay. Sometimes we kind of like that challenge more, right? Because how many times, I know you have, or I know Ian has, how many times, though, have we gotten people to the finish line that when they started, they didn't think they had a chance?
We had a guy that didn't have a credit score. He makes a good amount of money, like $120 a year. Single man with a dog. Didn't have a credit score because he wasn't using credit.
Sure.
Ian changed that within 3 months. He told him exactly what to do. We did follow up, and then we got into contract. It's totally possible.
Right.
But if you don't, and he was a prime candidate. He said, I checked my score on, whatever. He didn't have a score when he used a soft pull, which I want you to speak to also. You guys use a soft pull. How is that different than a hard pull?
Yeah, so a soft pull is really cool because it doesn't leave a hard inquiry on your credit.
Okay.
Which in essence doesn't lower your score.
Okay.
So we can take a look. It's like window shopping, right? We can take a look at everything. We could see enough to give us an idea or a diagnosis of what we need to do to get you there. But it doesn't leave a hard inquiry on your credit, which won't affect things when we get into the actual process.
Okay.
And I think another good thing about a soft pull is it enables us to be able to get you a pre-approval. We can actually get an underwritten pre-approval with the soft pull. And then by the time you identify a property and we're ready to go live, that's when we do the hard pull. And we only need it once at that time, right?
Perfect.
So we're able to preserve your credit too while you're shopping for homes by doing that.
It's a good plan. Yeah. One of the other things that I wanted to talk about here was flipping versus buy and hold. Yes. So I don't know what your opinion is, but right now I don't often work with investors or flippers because I think unless you're doing this on the regular, I'm not interested in working with you. Right. I know that sounds harsh, but it's just true. If you don't have the experience of doing this, rarely are you going to come out ahead because the guys that do come out ahead have a systematic plan with a contractor. They use IKEA kitchen. They're not doing custom. It's IKEA all day long. I could give you the examples. They have the same toilet. They have the same flooring with the same flooring guy, the same installer company. I mean, it's systematic. And when you veer off that system and you don't know, you're doing this onesie twosie, it's really hard to make money at that. So I don't work with a lot of investors, but I did just entertain a new one. He's got a lot of experience out of state and has some folks here. And I have found a lot of properties that will qualify for fix and flip that are going to work. But I think the important piece to mention is if this is something you have experience with and you are getting into, make sure that you have a good spreadsheet based on what your purchase price is and then what your ARV is. Don't forget that you need to have all of these factors in for new windows, new HVAC, flooring, whatever those numbers are, and then your hard money and your holding cost. I think sometimes people overlook that and they have a mark of what they want to make and they don't end up meeting that mark because they don't have all their costs in. There's a cost to borrow the money. You're usually using hard money. Few people have $600,000 laying around to do this with. And there's a cost for that hard money. There's a cost to hold for a couple of months. There's a cost to stage. So make sure you have all your costs in. What do you think about fix and flip versus buy and hold, Joseph? What's your preference?
It depends on the market. Right.
What would you say your preference would be right now in this market, right now where we are?
Right now, I feel buy and hold because the inventory is so low.
Right.
And so there's a ton of people in the rental market right now. So you can really get yourself some income.
Thanks for bringing that up because I saw our rental market really flatline here recently. But as we move to a seller's market, that's going to change, right? And rent, what's the word I'm looking for? I can't think of the word now. Year after year, rent goes up 10%. That's like a factor. So if you're looking at $2,500 right now for rent and a 10% increase, that's $250. If we're doing that over the next 5 years, you're paying someone else's mortgage. Be clear on that, renters. You are paying a mortgage. It's just not yours. And if it's not yours, you can't pay it off in 22 to 30 years because you can pay it off in 22 years, making that extra payment every year. In fact, you could even help someone that wants to pay it off in 15 years but not have a 15-year loan. Figure out what that math is to accomplish that goal. Right? For people in commission or sales that are making it's a fun thing to do. So and I think that's the real way to retirement is to be able to have a mortgage that you're going to have paid off. That's your biggest expense, your biggest. So I think as we come back, I wanted to talk a little bit about this buy and hold and rental market rates when you're going into a rental when we come back.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 0174567.
Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 0174567. And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Heyo, it's your Real Estate Profits here, breaking down what our market is doing right now and what is about to go down. I'm going to put Joseph on the spot now and ask him a whole lot of questions that I'm sure you have on your mind and didn't know the answer to. So we were just talking about fix and flips versus buy and hold. I'm a buy and hold girl. I don't have the risk tolerance for the fix and flip. I haven't done it. I don't have the experience. All the reasons I talk other people out of it. Buy and hold. I'm a buy and hold girl. It's what I believe in. I have people that also believe in this, and they are always curious as to why they're paying a higher rate for a rental property versus their owner occupant. Why is that?
Well,
and what's the difference to rate?
Yeah. So there's more risk.
Okay.
Number one, because you're not occupying it.
Got it.
And you're depending on, well, and here's probably the bigger, I don't want to say issue, but the bigger point, right, is most people, when you're renting, you own something else. Mm-hmm. So now you're responsible for carrying two notes or two mortgage payments, right?
So you're saying, like, if you lose your job or something goes down, you're gonna pay your mortgage where your family is.
Right.
If these other renters stop paying, that's secondary concern.
Yeah,
so it's a higher risk factor.
It's a higher risk. So because of that higher risk, then they hedge that risk with higher interest rates and bigger down payments.
Sure.
And more restrictions.
Sure.
Especially, I don't know if you've noticed, but I'm sure you have. Within the last, I'd say, 5 years, they've dramatically changed the guidelines for investment loans.
I have noticed that, and I can't say I'm a fan.
Yeah, dramatically. It not only the guidelines, but the loan to value, right? You can only take out so much cash on it. You could, but and the reason that exists, not to get off on another avenue, but is they want owner-occupied properties. They want families in homes, right? So that's another reason.
It's safer for the lender.
It is safer.
And it's safer because the lender's job is not to just get you a loan and have a fuzzy, warm feeling, right? Their job is to sell it on the secondary market and make some money.
Right.
So you're a better bet if you're an owner-occupant.
And it's a riskier loan. Like you're going to notice that your loan to value or the amount that you're going to be able to get for a loan is going to strongly depend on credit score and income, right? Where when you're buying owner-occupied property, it's a little more lax as far as your income and credit score requirements. Because they figure if you're going to live there with your family, you're going to do whatever you can to make sure that payment's paid. Right. So that's one of the biggest issues. Also, they want to make sure that you can afford it. One of the things that a lot of people may not understand that's very important to understand about getting into investments is having assets. You want to have liquid assets. Most loans are going to require that you have a minimum of 3 months or 90 days of PITI, which is principal, interest, taxes, and insurance.
On top of your down payment, on top of your closing costs.
Exactly.
Okay.
Exactly. So that's to make sure that if something goes sideways, you can afford to make sure this house stays afloat. And
how long do you need to keep that money in your savings account to show them?
Yeah, so here's a term for the day. It's called seasoning.
Okay.
And seasoning is basically how long, like you said, how long you keep that money in your account. The minimum's usually 90 days, right? Or 3 months payments is the lowest I've seen. It's pretty customary to have 6 months payments in there.
Yeah, I have seen 6. I think we need to come out with a little glossary cheat sheet for the show here.
Yeah.
And today's word is seasoning. And it's not just about your chicken for your meal prep, like Mr. Joseph Muscles over here is handling. We're talking about seasoning for your money so that you can get into the rental market. Right. Now, what are you seeing in a differential on rate? If we're in high fives right now with FHA for owner occupant, and you can't use FHA because you're not an owner-occupant, right? You can't use FHA or VA or USDA, any of these owner-occupant government loans. Yeah. You can't use those on a rental. So you can only use a conventional, right?
So you actually can have 2 FHA loans.
Well, you're right, but you couldn't start with it.
Right.
Okay. We're not going to confuse.
It's okay.
Sorry. Joseph and I could go for, we have good, Joseph has like king of ideas. I love going around with you because we can just come up with like we could do that and then a little wraparound and this. Yeah. For general population, though, they're going to have to use a conventional to purchase, right?
Right.
They already own a home. So what's that rate differential look like on average?
About 1% to 1.25%.
Okay. So that's a difference.
It's a big difference.
It's a difference in payment. Yep. Okay.
And down payment. So the average you're going to need for a down payment here, most of the time they're around 30%. Most of the time. Right?
What happened to 20? We were doing 20 a minute ago. Right. Now we're at 30?
Well, it's just a higher risk in this market right now.
Got it.
Right?
Got it.
So
now, do you think that's going to change as our market shifts here?
I think it will. But the other caveat to that is, yes, that may change, but then the lenders tend to want more owner-occupied homes.
Got it.
When the market changes.
Got it.
Like right now, they don't mind as much because it's such a dead market. They're like, hey, let's just get homes sold. Yeah. Right?
Okay.
So they're a little more lenient right now. And I know we keep beating this dead horse, but now is the time for everything. Because let me tell you, lenders are more lenient. They have more staff now, right? A lot of them have cut back because they just don't have
understatement,
a lot of business.
Right? Yeah.
So coupled with lenders are being more creative right now, because if you remember in 2020, lenders didn't care if you got a loan or not because there's 1,000 of them waiting right behind you.
Yep.
It's not the case right now.
So true.
Right?
Which, thank you for pointing that out. But what you just said reminds me of another question that I think I need to ask.
Sure.
If it's easier to get an owner-occupant loan right now, right? How long do you have to be in that house before I can make it into a rental? If that's what's going to be easier.
Right.
Let's say I already own a home, right? Because I did this recently. Right. I already owned a home, and I had a situation that allowed me to have a second FHA loan within 100 miles.
Right.
And that was allowed. So how long does it take the average person to live in that home before they can now use it as a rental?
I would say 6 months minimum.
6 months. And do you have to have a change in circumstance to do that, or 6 months would be okay?
6 months would be okay. I mean, they're usually not going to question it. I mean, the only time that comes up is if, something drastic happens that alerts the lender.
Okay.
Right? Okay. But as long as you're making your payments on time and you're minding your P's and Q's, the chances of a lender coming and investigating or looking into whether you're there or not are pretty slim, right? But the rule of thumb is 6 months. Like as long as you wait there for 6 months, and you pay your mortgage for 6 months, and you've lived there for 6 months. Because the thing is it's hard to determine what someone's circumstances are going to be or how they're going to change, right? So there's not really like a hard line rule to it, but 6 months is kind of the sweet spot to make sure once you get past that and make 6 months payments. See, because there's two things that happens there. It helps your credit, number one. It shows the lender that you're making your payments on time.
Right.
And 6 months, 180 days, that's a good benchmark to see how it's going to affect how you live, right?
Okay, got a caveat to this question.
Sure.
Let's say I buy a duplex, right? First time buyer, want to buy a duplex. I'm going to rent out one side and I'm going to get a roommate in the other side, make all my payments for, let's say it's been 12 months.
Sure.
Now I want to buy another property.
Right.
I have to go into a conventional loan? This is FHA.
Right.
Bought it FHA.
Right.
Now I want to buy a second home, owner occupant. I don't have to do a refi here, do I?
No.
Okay, so I'm going to keep that FHA loan. I got a good rate. I refinanced already. I'm good to go.
Right.
Okay, now we're at 12 months. Now I want another loan.
Right.
How much am I going to have to put down to get a conventional loan since I have this FHA loan?
3%.
3%.
That's
So
the minimum.
we know rates are going to be lower next year.
Right.
So for somebody who really wants to capitalize on this market,
Yeah.
that could be a pretty good strategy.
And I love that you brought that up because that's something most people don't know. I can't tell you how many times I still hear people say, isn't it a minimum 20% down?
Right. And you're saying 3%, even if you
3%.
already own another home, you could get in with as little as 3. Now, I know there's a lot of caveats to this. It's going to depend on because we've had this happen where, we had this happen recently. I had already sold a property to a family. She had a job change. We needed to move her back an hour the other direction. And we had to use 5% down because of their particular situation, whatever. 5% though. And that same client, she's the example I gave you about the 630 property that we offered 600 and ended up at 614 with 5% back.
Oh, yeah.
Rented out her house. She's making money on it.
That's
She has a low mortgage and they're making about $1,400 on what they're getting in rent, which more than makes up for the new house and what they're paying.
Right. And that's the number one investment, what you just said.
Sure.
I mean, there's no safer investment than real estate.
Sure.
At all. I know people may think different, but you got to look at the long term, right? And the reason I say that is short-term investments like the stock market, they're so volatile because there's so many other factors that contribute to that.
Isn't that the truth?
Right.
Yeah.
Where with homes, depending on where you choose to live, that market, wherever that market is going to determine your investment.
Sure.
So you have a lot more of a sheltered opportunity to succeed in real estate because there's not a lot of other factors, compensating factors that can affect that.
Yeah.
And the biggest thing that my grandpa told me when I was a kid, when he got into real estate, he was telling me, he said, people always need a place to live.
That's really true.
Right.
You do. You have to have a place to live. Everything else is sort of secondary to shelter, right?
Right. And so with that being said, you need a place to live. Your neighbors need a place to live.
Right.
All your every person you run into needs a place to live.
Right. It is sort of the most basic. Yeah.
Right. So it's either you're doing it for yourself or you're providing housing for other families.
Sure.
But it's such a necessity. So when we can get into that mindset and then approach it from a perspective that we need to start right at the beginning, right? And figure out our credit score, figure out what we need to do and how we need to get there. I think that's the best way to go about it.
That's a fire alarm to call now.
Is it?
I don't know where the beeping's coming from. Give us your number one more time. For a fire alarm, call Joseph.
Sure, 916-849-8925.
And I think right now we're at this, again, sweet spot. I have so many homes that have been on the market over 60 days.
Right.
So if you're hearing otherwise, guys, it's just not true. You can call me direct, 916-532-8916. Shoot me a text. I can get you out. When people call me, they're always surprised. They're like, oh, I heard it's, there's not inventory, or I heard whatever. How quickly can we start looking at houses? I'm like, we'll get you a list within an hour. Are you available this afternoon? Tomorrow? What are we doing? And then we go get into contract. It's a lot of fun. So don't delay. I think that's the message of the show today. There is a good amount of inventory. We just laid out a whole opportunity that one could capitalize on. Going in right now on FHA, getting yourself a single family or a duplex. I'm a big fan of multifam. I love multifam. Get a duplex, and you could go in on another property next year when rates are lower. Don't wait. Take advantage of that. Come in with 3% down. But how are they going to start again? They're going to start by getting a soft pull and contacting Joseph. So give us your number again.
916-849-8925.
Okay, you heard it here, guys. Don't miss your opportunity. Call Joseph today. We'll see you back next week. Have a happy and safe week in the rain.